Hey, you guys, what is up? I decided to just go ahead and do a little live because things are going to start getting interesting this next week with Beachbody. Yeah, I have some intel, right? So I know some stuff that is going to be happening. And it's going to be an interesting week. We have so next week is leadership for Beachbody. So if you are, I want to say it's a two-star diamond and above, you get invited to leadership. And with leadership, they do new announcements. It's where they announce the change of the name to body. But apparently some things are going to be coming out this week, Thursday and Friday, that are going to be some big changes for body. And I figured then let's do some pregame. So we're going to do some pregame before this. And we had talked a lot about doing the second quarter financial call. And I decided, you know what, I'm just going to do it. I'm going to hop on and just get it done. So we can see what's going to happen this week. So what we're going to do, we're going to listen to the second quarter financial call, and it's not incredibly interesting in the middle as they're talking all the numbers and stuff. So I am going to do the beginning part because I think that part is really interesting, that Carl is going to talk. And then we're going to do the Q&A part because the Q&A part is amazing. Welcome. Absolutely. Lurk as much as you want because this is going to get interesting. All right. So I'm going to pull in this Q2 call. And there's not a whole lot to see. So I'll keep it over here, just kind of quietly on the side. And then hopefully you guys can hear it okay. All right.
Good afternoon, ladies and gentlemen, and welcome to the Beachbody Company's second quarter earnings call. Currently, all participants are in listen mode only. Following the presentation, we will conduct a question and answer session. Instructions will be provided at the time that you start the queue.
Hold on.
If anyone has any difficulties hearing the conference, please press *0 for operator assistance.
Okay, he was beyond fast. Oh, hey. He was way too fast for me. So I do have it on 1.25, and I may change that, but that we're going to leave it at 1.25 for right now because let's be real, this is not entertaining. Most of it anyway.
Operator assistance. I would like to remind everyone that this conference call is being recorded, and I would now turn the call over to Bruce Williams, Managing Director of ICR Investor Relations.
Welcome, everyone, and thank you for joining us for our second.
Okay, and I just want to make sure that everyone can hear it okay. So can you guys let me know in the comments if you can hear the call? I just want to make sure that it's clear.
Quarter earnings call. With me on the call today are Carl Daikeler, Co-founder and Chief Executive Officer of the Beachbody Company, Mark Goldston, Executive Chairman, and Mark Sudan, Chief Financial Officer. Following the prepared remarks, we'll open the call up for questions. Before we get started, I would like to remind you of the company's safe harbor language. The statements contained in this conference call, which are not historical facts, may be deemed to constitute forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. Actual future results may differ materially from those suggested in such statements due to a number of risks and uncertainties, all of which are described in the company's filings with the SEC, which includes today's press release. Today's call will include references to non-GAAP financial measures, such as adjusted Ebitda. A reconciliation of these non-GAAP financial measures to the comparable GAAP financial measures is available within the earnings release, which can be found on our website. Now, I would like to turn the call over to Carl.
Hello and good afternoon. Thank you for joining us today. On our last call, we announced several changes taking place at Body, and most recently announced that Mark Goldston joined the team as Executive Chairman. Mark is a seasoned consumer products, fitness, and internet leader with valuable experience having run public companies for decades. This addition signals an exciting time for the company and for me to personally have the opportunity to work beside an executive of Mark's experience.
Okay, so just really quickly on Mark. Mark is a fixer. So Mark's job, hey Marie, Mark's job is to come in and turn the company around. And you will see, sorry, I'm getting a call and I have no idea who that is. In my opinion, Mark's not doing a great job. So let's hear what Carl has to say, and then we'll do some looking at this stock.
Particularly as we're all eager to achieve a turnaround in our profitability and the performance of our stock. When our board member, Kevin Mayer, introduced me to Mark, we discovered that we shared a common vision on how to drive long-term growth for BODi. And I could see that his experience running public companies would add incredible value to the management team. I want to take this opportunity to let Mark share his perspective on his first 50 days with BODi. But let me reiterate a few key things about Mark's arrangement with the company first. As the executive chairman, Mark is a board member and has an executive officer role, actively participating in the management and decision-making processes of the company, with a focus on the more transformational initiatives. Driven by his belief in the underlying value of BODi, he chose to take all of his compensation in equity stock options, the majority of which vest based on stock performance. And this transaction was so important to my determination to turn around the company and my enthusiasm for partnering with an executive who's done this kind of turnaround many times before. I forfeited 8 million common shares that I personally owned to minimize dilution of Mark's equity grant to the rest of the shareholders.
Okay, so in my opinion, that is huge, right? So he is not being paid a salary. It's all stock equity options. And Carl gave him 8 million, right? So the interesting thing to me though, and I think that Carl started this process too late. I think it's too little too late, and that he should have started this process a long time ago, right? He should have been more proactive, because the company has been going down consistently since they went public. And so if you look at their trajectory, why in the world did he wait until now, right? So stock price is 30 cents as of right now. Last week it was 28 cents, I think was the lowest it got. So when your company is doing that poorly for that long, I think that, in my opinion, Carl's ego got in the way and he's now trying to fix it, but I think it's too late.
Building on Mark's deep digital and consumer experience, his role is to help us turn cash flow positive as soon as possible. Mark and I are working closely together along with other senior executives, and the benefits are already materializing. Now, let me turn it over to Mark to share his perspective, which I think can be insightful to our shareholders and investors. Mark?
Thank you very much, Carl, and I really appreciate the warm welcome to the BODi team. I'm so delighted to be part of this exciting story and use my broad range of experience to contribute to the success of the company. You know, Carl and I started talking back in mid-May, and I've had a considerable amount of time with him, the board, and the executive team in that time. I've been very impressed by Carl and the team he's assembled, and I've really enjoyed working closely with them in the past 2 months. I've run many public companies dating back to 1991, and my expertise has been focused on corporate turnarounds, unlocking their intrinsic value while re-architecting their infrastructure to drive increases in revenue and profitability. I actually wrote a book called The Turnaround Prescription many years ago, which focused on repositioning and restructuring companies. You know, many people have asked why I would agree to join BODi at this time. My answer was that I truly could not believe that BODi was trading at 44 cents a share with a market cap of roughly $150 million, given what I'd learned about the company. I believe this company has incredibly valuable assets to work with, as it has arguably got the finest, broadest, and most comprehensive digital fitness library in the world.
Okay. It's interesting. I am wondering what exactly he is seeing in this, because I know, right? Trading at 44 cents a share and it's gone down 14 cents a share since then. It's lost a third of its value since he was talking. So that hasn't aged well. But what is he looking at? Because if you look at some of the other options that are out there, there are a lot of options within the market that does much better, whether it is in the nutritional offerings, because if you look at Shakeology, it is overpriced. The retention rate for people who are continuing to order, not good, right? You have a pre-workout that is pretty good, but it's again overpriced. There's so many of their nutritional products, they're not top of class. With their workout programs, again, not top of class. So I don't understand what they are seeing and what they're trying to put out there, because this just isn't it. And I think that one of the main issues is the MLM model and the amount of money that they are paying out to these top coaches who really aren't doing anything anymore. It's ridiculous.
It's got an extremely valuable lineup of nutritional products and a great team of people. Not only does the company have tremendous brand equity with this powerful stable of digital and nutritional products, but it also has a very valuable customer database containing more than 14 million former customers, some of whom can be activated easily and very profitably with aggressive win-back programs to grow the business. If you consider the company's...
All right, so that is their strategy right now, is they have this database of 14 million previous customers, and I'm curious of how many of them are previous coaches that they are marketing aggressively to. People have told me that they're getting 3 to 4 emails per week trying to get them to sign up again. And I'm wondering what story Carl is telling him of why these people left. And to say that you're going to be able to do that. And then what do they come up with? This $99 per month deal, which I'm calling it a deal loosely because in my opinion, it is not a deal. But where you get 1 month of body and then also 20, hey Sam, 20 servings of Shakeology for $99. That is not a deal. That is not a deal. Because the value, if you look at it, no, this isn't it. So thinking that this vast group of 14 million previous customers is going to be your saving grace is, in my opinion, very much naive, maybe. I guess that could be a good word to use for this. And it shows how out of touch they are. Hey, Heather. They're totally out of touch to think that of these 14 million, they're going to be able to get quick win backs. Here's the other problem. If they are a win back, they are not getting, the coaches that they are assigned to are not getting the commission for that win back, but they are going to be expected to support them. So the coaches are upset with this whole program because it is not benefiting them. And they're kind of nixing them out of it, right? So it's not, I just don't see it. I don't see it, Mark and Carl.
Its historical CAC, or customer acquisition cost. This existing body customer email database, in excess of 14 million people, most of which are former customers, has generated billions of dollars of historical revenue and was the principal driver behind Body being a very profitable company for 21 of its 24 years of existence.
Okay, so you're right. It has been profitable 21 out of 24, but it's been the last 3 years that it hasn't been profitable and it hasn't been able to get that out. So let's talk about this. I think there are a lot of people who bought Body stock when it was released because the coaches were encouraged. They were encouraged to purchase it. And I know I've talked to quite a few people who, thank goodness, hadn't purchased as much as some of these other coaches, but they, like anybody who invested in this, has lost their ass. I mean, it just is what it is. And it, I don't see how I don't see how it's going to recover. And I don't know if you guys were on at the beginning when I said there's actually some big announcements that are going to be coming out. Let me look up some of my intel real quick. Body is going to be announcing things this week on Thursday and Friday. They've been doing a pre-leadership meeting. They had Brendan Burchard, and then their corporate as this advisory board. And who is in the advisory board? The advisory board are your top level coaches. So it's your top 10 people who have been around for a really long time and who are still bought in. And they say it's been amazing and positive and hopeful. They're excited about the future. And there will be an email coming out from Team Body this week on Thursday and Friday, depending on your rank. And then they're going to be doing a debrief about it and conversations so that they can get the information, they can answer questions, and be there for their teams. So, I mean, I'm just curious. Anyone have any recommendations or any guesses? All I'm saying is there's a group of us that were like, ooh, we're going to have some popcorn and candy corn, Reese's pumpkins, whatever. Because it's going to be big. It's going to be big. Leadership happens next week. So this week they did this like pre-leadership event, right? They did a pre-leadership event to hype people up and hype their top leaders up. This advisory board, not the coach advisory board. This is a different advisory board. And I think my guess is that it is the people who are in the Slay Squad, because they're the ones who got them to change the name to Partner. I think they do have a very large, they have a large seat at the table right now. It's going to be interesting to see if they decide to go to more of an affiliate. But I don't know how any of the people who have been in Body as the top leaders would want to be an affiliate, because that is not where the money is. The money is not being an affiliate. It is having a team in an MLM model. So we've, and you can see this. You can see that everyone is in a panic. The number of people, like you said, Herbal Face Food, Trim Fit, MRR, or they're going to different companies, Modere. You can feel the levels of desperation. They know that the ship is going down. So you can see them. And I don't know. It'll be interesting to see what they do, but just a couple days. Let's see.
If a competitive fitness or nutrition company were to attempt to amass a database similar to the 14 million people on the Body database, given the current customer acquisition costs in this industry, it would cost literally billions of dollars and take many years to reach the size database that Body has today.
Okay, but here's the deal. Just thinking that because you have this database that people are going to reactivate, all I'm saying is I'm in the database. No way am I reactivating. And how many other people are in this database because they left because of being disgruntled at the changes that were happening? Probably tomorrow, maybe I'm going to do another one, right? I just feel we're just going to talk about Carl. We're going to talk about Carl this week, because let's be real. That is where the problem lies. It lies with Carl and the way that he has been running this. But the amount of coaches who are disgruntled at the changes that have happened within Body over the last several years, whether it is they're kind of, you guys are going to love these messages. They are hilarious. But moving more to a model where they got away from kind of the hardcore fitness, the P90Xs, the Insanities. he has moved over to really platforming Autumn, right? That has been a mistake. That's been a mistake. I think getting like the way that the program has shifted over to the to be on the Body platform, it's frustrating because they're having you purchase things. They're having you purchase these super blocks, but as soon as you don't belong to Body anymore, all of that is gone. And I mean, at least I still have a ton of DVDs, right? I still can do programs if I want to that I have DVDs for. And all of that is gone. Um, so that's there. And then the other thing that doesn't make any sense to me. Yeah, Autumn's so likable. She's so likable. Uh, when they combined with OpenFit, they have an entirely they have an entire supplement line that they have not been marketing and they've not been selling. It's the Ladder. I think it's called Ladder. Let me look. Ladder supplements, and they are now going to start putting that on Amazon more. They are supplements that were, I want to say Arnold Schwarzenegger Ladder workout supplements. Let's look. Yeah, they've got whey protein powder. And I want to say that they were created from like Arnold Schwarzenegger and someone else. I'm going to have to do some looking on it. But part of this, and I don't remember if it is on this call that Carl says that they are also going to be adding additional products onto Amazon. So one more way that they're going to undercut the coaches.
For those reasons, I strongly believe in the intrinsic value of this company, just on the component parts basis alone, is vastly greater than where the stock trades today. That's the major reason I decided to take 100% of my comp in stock options. I receive no cash because I want to be totally aligned with all of you, the shareholders, as we navigate this journey together. We've spent virtually every day since I joined the company almost 2 months ago building the turnaround plan. We've been prioritizing revenue generating initiatives. We've created a lever analysis, which identified additional cash generation moves if needed, and setting the stage for monetizing these incredible digital, nutritional, and database assets to turn this company profitable. With that, our goal is to prioritize profitable revenue, not growth at all costs. As one of the largest digital fitness companies today, scale is not the primary issue for this company. What we need to develop are higher quality revenue streams that generate healthy contribution margins to increase the bottom line. Our primary focus will be on cash flow generation and creating incremental revenue opportunities which focus on their ability to instantly generate cash and flow through profitability. We've constructed a powerful turnaround plan for the company, and we will be vigilant in our focus and execution as we move our way through the priority list to help transform Body into a very profitable, cash-rich company.
It's so funny to hear, like, to look at this now, because again, this call was back in August, and at this point, they were at 44 cents. They've gone down to a low of 28 cents. Right now, they're 30 cents. But here's what doesn't make sense to me. When they purchased OpenFit, so this was several years ago. So Ladder, let me just tell you guys a little bit about this. Ladder is a sports nutrition company dedicated to creating high performance, NSF certified for sport workout supplements for daily use. So this this supplement line was created from LeBron James and his trainer, because they spent 4 years developing this, and also and like I said, is also endorsed by Arnold Schwarzenegger. Now, they have a pre-workout. Let's look at their pre-work. I'm going to look at their pre-workout. Strawberry lemonade, shocker. It looks like it's fairly similar to Energize. I was like, what is that? What's that called again? Okay, their pre-workout, it's $54 for 30 servings. That is still high. I don't think that that doesn't seem very, very marketable to me. But then they have whey protein. They have a chocolate and a vanilla. And the nice part is they can actually call this one a protein shake because it has a lot more protein than Shakeology. It's got 26 grams of protein. And this one, let's look and see how much it is on Amazon. So for chocolate packets, is that only 15? You can get a bag. Let's see. A pouch of chocolate has 30 servings and it's $59.90. Interesting. Why aren't they doing this? And it's funny because if you actually look in the Andrea Rogers program, was it Bar Blend? No. I don't remember what her program was because honestly it didn't do that great. But in her program, you can see the ladder supplements behind her because she filmed all of that while she was still with OpenFit. And you can see the ladder supplements. So why didn't they utilize these within the last couple of years to get some cash flow? Like that doesn't make any sense to me. And Mark does sound like he's recording the radio for a ringtone. That's funny. So anyway, I mean, they have options, right? They have options that they can do. It doesn't make any sense to me that they haven't been utilizing them before now.
The next few months will be a period of positive and deliberate transformation. So I'm going
Has it been positive transformation in the last 2 months, Mark? I'm going to say no.
to ask that you please be patient with us as we tap into new revenue streams, new audiences, and new marketing tactics that the company has not previously utilized. I feel great about the prospects for a successful turnaround at Body, and I'm looking forward to profitable growth ahead. With that, let me turn the call back over to you, Carl.
Thanks, Mark. I totally agree. Let's continue now with a high-level overview of our second quarter results and operational highlights. Then Mark Sweden, our Chief Financial Officer, will provide additional detail on Q2 financial results and guidance for Q3. For the second quarter, our revenues and EBITDA were within our guidance range, and I want to thank our team for the continued hard work in driving our transformation. While our overall digital subscriber count decreased by 12% to 1.53 million in Q2 from Q1 of 2023, our new digital premium subscription, Body, grew subscribers by 77% to 711,000 in Q2 over Q1.
Okay, though, the reason that it grew was because you forced people over to that option and you still lost people. So that doesn't make any sense. I just think if Carl could have Melanie Mitro, Julie Voris, if they could just start running things for him, maybe he would do better. And actually, I think he has better people there's we'll do some bros of Beachbody and how are the bros feeling in all of this? Because they're not feeling great and they have some very good ideas for Carl. We're going to get into that one because they lost it on Carl this weekend on social media.
Q1. Now, let me briefly talk about our transformation. Last year, we set a plan with three major components: simplifying our platforms into one complete digital solution, including fitness, nutrition, and personal development, invigorating our sales and marketing for new customer acquisition, and adjusting our cost structure. As we discussed on our last earnings call, our new consolidated digital subscription product, what we call Body, that's BODI, was launched on schedule and under budget, and is exceeding expectations, as demonstrated by our second quarter customer renewals. Our existing customers, largely the basic Beachbody on-demand customers, have continued to renew at approximately 60% into this Body premium subscription.
Okay, he is saying that like that's a positive thing. They're renewing at a rate of 60%. You are losing 40% of your customers at that rollover. That's not a great number. That is not a good number, sir. So trying to make that sound positive.
with an annual price of $179 compared to the prior $99 subscription. This renewal rate continues to beat our expectations, which tells us that customers are responding well to our new formats and monthly body block programming.
Okay, but are they? Are they responding well based on this stupid $99 weight loss pack that I mean, that's how Carl promoted it, was as a weight loss pack. He's like, screw this health esteem stuff. We're just gonna start calling it like it is. They're doing so many things that people don't want. People don't want the body blocks. The body blocks, in my opinion, were an awful idea. It is just regurgitated routines, regurgitated fitness, and they're not doing a lot of innovation. I mean, they do have Shanti's new program coming out, and um, maybe that will help invigorate some things. But again, I think he's gotten too far away from their initial branding and what people wanted from body.
In addition, we saw an uptake in nutrition retention for the first half of the year, driven by our new content-based retention tactics. While we're pleased by the increased nutrition retention, we also still have a significant opportunity to increase the penetration of nutrition into our existing digital subscriber base.
Does that make you guys think of Pitch Perfect? Still not a good enough reason to use the word penetration. No, don't do that, sir.
And that remains a priority. We're aggressively working on strategies to increase that take rate. While we're confident in our strategic product direction, we've also been keenly focused on sales and marketing strategies to optimize our opportunities. Let me take you through some of our strategic initiatives that we discussed on our last earnings call, and then I'll talk about some new strategies. First, our coach and partner network activation. During the quarter, we had our Partner Leadership Summit, which was attended by about 12,000 coaches and partners.
12,000. That is a ridiculously low number of coaches. So, I mean, he's saying like, wow, we had 12,000 people. That's tiny. That is really small for what you had been having in the past. I want to say when I was in Nashville, they said there were something like 40,000. So, yikes.
We held this event to train our partners on our new body premium solution, our new bundles, and to reinforce the breakthrough of the health esteem category. We also deployed a new sales incentive in Q2, and in July, we launched a new tool to help partners and leaders develop a sales action plan to teach them how to collaborate as teams. In September, our top leaders will hold in-person leadership academies in various key markets to continue training new sales leaders.
Okay, these sales trainings that took the place of Super Saturday. Super Saturday, in my opinion, was much more beneficial, and it happened in a lot of different locations. And then this one, they had what, 6? There were like 6 cities that had it. That was it. So again, it's interesting to listen to this and the spin that they're putting on things when we know what's actually going on.
Leaders. As you can see, we're intensely focused on training and activating our coach and partner network. And second, on our customer database reactivation initiative, we've spoken on the last couple of calls about reactivating our large churned database. Now, with the right team in place, we successfully kicked off several aggressive win-back marketing campaigns at the end of July.
All I'm going to say is if you have not watched Deanna Mims' video of the marketing campaign that they've been doing, I would highly recommend it because their emails are hilarious. The emails like just ooze desperation, and they show that they're completely and totally disconnected from why people have been canceling.
And the campaigns are showing us which offers are the most effective in converting past churn customers into current paying subscribers. We're leaning into this strategy at scale in the third and fourth quarter. Third, on performance marketing. Our enhancements in Q2 resulted in greater digital subscriber starts over Q1 and at the higher price of the body premium tier. In fact, our conversion ratio of visitors to subscribers increased by 27% in Q2 over Q1, driven by improvements in audience targeting, messaging, and digital landing pages. We continue to monitor and manage the order funnel very closely to ensure our conversion continues to improve. We're also piloting additional new strategies, including scaling on Amazon and launching a new free preview tier late in the third quarter.
Okay, so did you guys catch that? They're adding additional things to Amazon. I do think maybe they'll start doing the ladder supplements more, but one of their things is to compete with their coaches by putting more things on Amazon. And then the late Q3 promotion that he mentioned is that $99 monthly subscription, which is not a good deal. And this man is so disconnected from what, in my opinion, the market actually is asking for.
With regards to Amazon, we plan to expand our nutrition portfolio there. In Q4 of 2023, our plan is to launch and start actively marketing across a broader set of categories. While we currently have a small variety of products on Amazon, we haven't been prioritizing the channel. And our latest tests indicate this is a large growth opportunity without undermining our other sales channels. So we're in the process of selecting an experienced partner with best-in-class capabilities that'll help us drive growth on Amazon with proven best practices. Next, we're creating a free preview layer of digital content for prospects to engage with our extensive library of samples of our most popular content while visitors consider subscribing. This will enable our database activation team to convert visitors to paying digital and supplement subscribers with sophisticated conversion funnels.
Sophisticated conversion funnels. So they're trying to convert people from like a trial subscription. I don't think that's going to work, especially when you're giving them like the programs, right? The programs that are already on there. You're not giving them the super blocks. You're giving them access to like 21 Day Fix or any of Shanti's programs, Turbo Jam, whatever. But you're not continuing to innovate those products. You are doing these bizarre body blocks. It doesn't make sense. Yes, they do the free preview tier, then they bombard you to sign up and keep harassing you. And in my opinion, I do think Amazon would take customers from partners, because if I truly loved the product and wanted to continue to purchase it, I wouldn't go to a partner. I would just buy it on Amazon. It'd be much easier.
As Mark said, these initiatives have already been defined, prioritized, and just launched in the last couple of weeks, and they'll be expanded over the coming quarters. We'll provide updates on shifting our revenues to higher contribution margin revenue while we continue to manage our cost structure as we navigate this turnaround. I echo Mark's comments that it'll take time to see all our initiatives through, but we're making significant progress in this transformation. And with that, I'll turn it over to CFO Mark Sweden, who will walk through the results for the quarter in more detail. Mark?
Okay, we really don't want to listen to Mark. So I'm going to fast forward it to the Q&A.
If there's any questions.
If you'd like to ask a question, followed by 1 on your telephone keypad. If for any reason you'd like to remove that question, please press star followed by 2. Again, to ask a question, it is star 1. Our first question is from Linda Bolton-Weiser with D.A. Davidson.
Linda is my hero. I just want to throw this out here right now. In any of the calls that we have listened to, the hard questions tend to come from Linda.
Your line is now open.
Yes, hello. So I'm not sure I understood why, if the main reason for the EBITDA negativity in the quarter was the $7 million of convention expense, and that won't be in there in the third quarter, what's the key reason that EBITDA is negative then in the third quarter for the guidance?
Hi, Linda, it's Mark. Last year, the event occurred in Q3, so the expense was in Q3. This year, the event occurred in Q2, so the expense is in Q2. It will not be in Q3. So that $7 million will not be recurring in subsequent quarters this year.
And I just want to mention, I do think they intentionally did that specifically for the financials because they've always held it in July, but holding it like the very end of June, I think was a very strategic move for the financials.
Right. So then wouldn't that make the EBITDA go like the improved sequentially quite a bit versus the negative EBITDA in the second quarter?
Yeah, so Linda is with one of the investment firms. So she is I don't know her official title, but she is one of the financial advisors in one of the investment firms.
Wouldn't it improve by $7 million sequentially?
Yeah, sequentially, it will improve 7 million as it relates to that factor, obviously driven by the rest of the revenue outlook. So that's why we gave Ebitda guidance loss of $3 to $8 million in Q3.
Okay, so well, all right. So the EBITDA was negative 5 million in the quarter. So 5, 6, 7. So it would be positive 2 million. So I guess there's other offsetting factors that are negative in the third quarter, offsetting that swing. Is that the way to think about it?
Yeah, I mean, it's based on the revenue.
So she's saying that if that happened in second quarter instead of third quarter, really you should then be positive in the third quarter. But now, why are we still negative by this much money? So what are you spending it on? Exactly, Hannah. Yeah, they're spending money terribly, and she's trying to get them to talk about that and where the money is, where they are spending the money.
Revenue guidance we gave of 120 to 130 million. Versus the actuals that we just reported in Q2.
Okay, so I think a while back, I can't quite remember when, but you had said that by the end of the year, you would be consistently EBITDA positive quarter by quarter. So are you still thinking that? I guess that means fourth quarter would have to be EBITDA positive. Is that still a target that you're thinking of, or has that changed a bit?
Yeah, I mean, listen, now that we've finalized our results for the first 6 months, we obviously wanted to see sequential improvement this year. Since that hasn't happened, that's why we've implemented the turnaround plan. So when we launched our transformation last year.
Like, seriously, I love this woman. She's like, so when you said this, did you mean it? Because it doesn't seem like you meant it. And it's funny. It's like when I ask my kids a question that I already know the answer to, just like even the tone of her voice. It's so good. It's so good.
Here, we said 3 things are going to happen. We're going to launch a new digital platform, which we did. It's having great reception. We're going to dramatically cut back our costs, which we did. And we're aiming for sequential revenue improvement. Since that hasn't happened, that's the essence of that turnaround plan we implemented and all the initiatives that Carl talked about. With that coming about, that's why, to be more prudent, we're pushing out that Q4 guidance we previously gave on EBITDA.
Okay, and then sorry if I missed this.
She's not done yet.
But where did the cash come from to repay the $15 million of debt?
Yeah, Linda, when you say where it came from, I mean, we had the cash on the balance sheet. When we raised the debt last year, we just finished the quarter with $58 million in cash. And since our spend is coming in line pretty well, we're not going to be burning as much cash as we did in Q2. So that's why we gave cash guidance as well. And we said if we come in at the EBITDA loss of 8 million, we would burn cash flow from operations a max of 5. And if we come in at the $3 million range, we'll break even. And we're also selling more bikes, which frankly generates cash while being a drag on EBITDA, but it's a sunk cost because it comes out.
So they are, again, this is one of the reasons that they keep doing these bike sales is they're trying to get rid of inventory and raise some quick cash to help their financials look better. But it is also a cost to them because they're not making the amount of money that they should on them. Why she didn't get changed back, right? Like she's just like, so I think, yikes.
Out of inventory. So we felt pretty comfortable, Linda, that, in coming to terms with Blue Torch, where we negotiated our new revenue covenants, we came to agreement with them that we could pay down $15 million of the debt, and based on our turnaround plans and generating revenues that would be more higher cash contribution margin, that we could pay down that part of the debt.
Oh, so sorry, I guess I misunderstood. The $15 million pay down is in the third quarter. It didn't happen in the second quarter. Is that correct?
That is correct. We did it.
Okay, so they did a pay down of $15 million to try and pay down some of the debt that they had taken on. So I'm super curious of what their Q3 financials are going to look like, and that will come out in November. And then again, depending on what it is that they end up doing the end of this week.
Did it after in July.
Oh, I gotcha. Okay. All right. Okay. And then just my final question is about channel conflict potential. I guess with direct sellers, in my experience, it's always a really big risk when you start selling your products on Amazon and, the coaches are trying to sell the same products. It usually causes a problem. Are you going to be selling slightly different SKUs on Amazon, or how do you intend to manage the channel conflict potential?
Yeah. Hi, Linda. This is Carl. Obviously, that's something that we're extremely sensitive to. And we've got, if you recall, we have the Ladder line of supplements, which is the sports supplement line, which is available to us. And we're obviously very sensitive to the effect of channel conflict. However, what's interesting is all channels benefit from a higher visibility and marketing to drive all channels. Rising tide floats all ships, if you will. And I got off a call yesterday with our leadership partners, and they are very eager to see us return to the visibility of a multi-channel, multi-sales channel company like we were in the early days of the network. So,
okay. Hold on, sir. So you're telling me that you were on with partners who were excited that you were going to be selling the same products that they're trying to sell on Amazon? And when you talk about getting back to like the early time, that was like infomercials. It was not competing against your own coaches on Amazon. So the fact that he's trying to spin this, like, I cannot think of any partner that would be like, yes, please sell the same product that I'm selling on Amazon, and people don't have to deal with the customer service of Body. They can just order it through Amazon. Like, come on. Okay, that's really funny. I mean, you got to give your cat some chicken. Oh, I'll have to tell you eventually, we're going to have another floof joining my house. I'm a little nervous about this. We'll have to have a floof break.
While the sensitivities to channel conflict are important, the TAM is so broad and so available. The most important thing is that our story gets out there so that all the partners and all the channels have the benefit of that leverage. So we're going to pay attention to it, but we feel like the synergies are greater than the competition.
He is such a good salesperson. Like, seriously, the way he's spinning this and making it seem like it is a positive thing. I can't wait to hear how he spins the announcement later on this week. I'm just saying.
Okay, thanks. That's it for me.
Thanks, Linda.
Our next question is from Jonathan Komp with Baird. Your line is now open.
Yeah, hi, good afternoon. Thank you. Mark, could I just follow up on the outlook for the back half? I know you mentioned previously thinking you could see sequential improvement in revenue, total revenue, and now the thinking's changed there. Could I just maybe ask further, what's changed in that outlook? I think previously you mentioned, the substantial increase in your subscription costs would drive a sequential improvement. So just any more thoughts on what's changed and how you're planning the business going forward here?
Yeah, John. I think, as we said, we had three major changes to deploy, right? We adjusted the cost structure dramatically, fixed the gross margin. The new platform is having great renewals, so customers are loving it.
It's not having great renewal. You're renewing at 60%. That to me is not a great renewal rate. So that, okay.
Our new sales acquisition, new customer acquisitions, has not picked up at the pace we'd like. So if you think about all these initiatives we talk about launching, Carl mentioned quite a few of them, that should drive revenues that are higher cash contribution margin. So it just delays our Q4 EBITDA commitment that we've done in the past. But we feel pretty good about all these changes that are coming about because they are higher cash contribution margin, and we're really focused on frankly changing that cash balance and driving it north from where it is.
This is Carl. Hi, John. The big lever obviously is our database activation efforts, which is a very low cost of acquisition, obviously minimal because we already have those customers. That can be a highly cash accretive activity, but we can't overestimate what it is because we're just getting it started. But that opportunity exists now that we've got the team built, and that's based on the testing that we've gone in July. We feel that it's going to be an important component of our turnaround efforts.
I really hope that when it comes time for the Q3, that people ask about this and ask about how successful was the marketing to these 14 million previous people.
If I could follow up there, Carl, I know you've had a substantial database and run and operated this business successfully for many years. So maybe what haven't you done in the past, and why that you have the opportunity to do now? And what are the challenges today as you've cut costs dramatically, building new teams and implementing new strategies successfully?
Yeah, I'll start with the last part. Frankly, the cost cutting has been a real gift to the business because it's simplified the operation of the overall business. So every little bit of leverage that we apply to marketing and sales benefits the one platform that we've got rather than be spread across three different subscription tiers or the other OpenFit platform that we had. So we've got just much more leverage on SG&A than we had even a year ago. But there's a couple of areas that as we've known each other for a long time. The infomercial business was quite productive for us. It's taken some time to rebuild the direct marketing business and understand the relationship of direct marketing and customer acquisition and how expensive that can be, and the value of a name that is in the database. And quite frankly, if there's anything that I regret, it's how slow I was to build the team and to get technologically sophisticated with understanding the value of that database. As Mark said in his opening comments, it would take us literally a couple $2 billion to acquire the critical mass that we have in that database.
Okay, you are a CEO of a major corporation and you didn't think that an email database was going to be beneficial? Like you didn't understand the value of that? He's so out of touch in my opinion. The fact that he's saying that they haven't been utilizing this for years, you like what? I know when he's like, I made a mistake. It's like, holy, can he admit that on other things too? Because that would be amazing.
So now that we found the expertise, we found just a brilliant executive who's done this before. and frankly have the creative marketing and offer talent on the team to be able to leverage that database for ongoing lifetime value and reactivation. And the one thing that I'll say that we didn't have before was the leverage of this new premium subscription tier at $179. And that gives us the flexibility to be creative with the offer structure to attract
Okay, so what he's saying is now that we're charging so much money, we have more wiggle room to offer some deals to get people back. That's what he's doing. And so going to this higher dollar amount was not necessarily the best idea, but now you can cut the cost to to your customers that you're offering. So that's one of the reasons that they went so high. But I think going that high was a mistake because a lot of people don't want the live content. And from what I've heard, their live content is not great. And so they wanted the programs. They wanted the way that it was structured in the past.
Reactivate that database. So the business model overall has matured to the point that it's simplified to the point that now we have a clear offer and message, the health esteem message, to bring the only total solution of fitness, nutrition, and mindset to that database that has already churned at compelling offers with a team who understands how to cohort it and maximize that opportunity. For the first time, I feel like we've got the sophistication to execute on this plan.
For the first time? For the first time. Oh my gosh. And then he immediately, this was last week, he sends out this weight loss message. So it feels as if he is just like, let's get away from this health esteem thing. And he called it, what did he call it? Let me look. Sorry, I have a lot of screenshots of stuff to share over the next little bit. It's the $99. It's the 30-day weight loss bundle, the $99 Rebel. Carl, I think he's regretting. Do you guys remember what their slogan used to be? I think we talked about it in our live stream, Jen and DC and I last week. Do you guys remember what because right now it is decide, commit, succeed. Do you guys remember what it used to be? What their trademark phrase used to be? I'll tell you in just a second. Put your guesses down because I'm curious.
And just last one for me, if I could. The digital subscribers, could you share where you forecast the number of digital subscribers eventually to bottom? And then, roughly at the third quarter revenue run rate, around 500 million annually. Is that a level that this business can be cash flow positive? And if not, any insights on what level of revenue you may need? Thank you.
John, just to make sure I got the second part of your question, you asked at what level can we be cash flow positive? Did I catch that right?
Yeah, that's right.
Okay. Yeah, John, I would say if you look at our revenue, right, they did come down 25% year over year, but our gross profit only came down 5% year over year. So we've been really diligent on the gross profit side. So our gross margin, I think over time will continue to enhance. And then on the OPEX side, we still, and we've done a lot, but we still got some to do. All that to say, I think the biggest part of the OPEX that'll get the benefit is by these new revenue streams that Carl's talking about when we talk about reactivating past customers or creating that free to view tier subscribers that we then upsell to. Those have very little sales and marketing costs. So that I think will improve our sales and marketing as a.
Okay, so it may have very little cost to you, but I don't think that you're going to have as much of a turnover as you think, that you're going to have an acceptance rate nearly where you want. And you are correct. The old one was look good naked. That was what their slogan used to be. And here's what they said: get ripped abs, toned legs, and an overall sexy physique. that was what they were promoting. And you've got coaches now, or partners, I guess, who are upset that they have gone away from that. And some of them never did. Let's be real. Some of them never bought into this whole health esteem thing.
The percentage of revenue. And that's what's going to help us get cash flow positive at this size we're at. So I think we've run it really well where we could get cash flow positive at this size. In terms of your questions on the subscriber base, look, we're not giving guidance on that front, but I think when you look at the body subscriber base, it's up 77% quarter over quarter. I mean, obviously, it's not going to continue at this rate of percentage increase, but definitely it's growing at a very healthy rate. And then you could do the calculus as to how many of the basic BOD, Beachbody On Demand subscriber base is left. So as we cycle through those, and we previously said we cycled through them through March, but obviously they're a lot more skewed to the front part of the year than the second half of the year, will become pure body subscription.
I'm sorry, this is Mark Goldstein. You also have the 14 million database program to recapture the people through CRM. So if you think about, John, the sub decline in Wemwood Bottom, you not only have this great 77% quarter on quarter at the 179 level, so we're not worrying about the expiration of the $99 cohort, but you've got this huge database of these 14 million people that when the offers have been pinpointed as to what's going to work the best and you put it out there, you literally have almost zero customer acquisition costs, and you have modest network compensation costs, which will certainly help to fortify over the long term.
But it feels like a Band-Aid, right? So you're going to offer them this promotion or whatever to get in, but then to maintain, you have it at such a high dollar amount, the it's $179 per year. That is too high. People don't want that. And yes, Sam, ripped abs does equal a very low body fat percentage. And let's be real, genetics have a lot to do with it too. So there are some people, no matter what they do, they're not going to get ripped abs. They're just genetically, that's not how their body is made. And like, I am just saying, for me, I have gotten to the point where I'm like, I just want to be healthy. I don't need ripped abs. But I mean, one of their programs was like thin thighs or something. Like, sir, come on.
Someday.
And I'm sorry, Mark, if I could follow up once more. I believe last year you adjusted your gross profit, so I would have the adjusted gross profit down more than 5%. And maybe the real question is, the sequential gross margin looks lower than the first quarter. Could you just maybe reconcile that, given the higher price point? And sorry, that's my last question.
Yeah, on the gross margin, you're asking why quarter over quarter it was a bit lower, because it was substantially more than a year ago, as we said. On the nutrition side, it was the same in Q1 versus Q2. On the digital side, because we have a large migration of bod to body, obviously that results in more people calling customer support. So that's increased a bit that expense. And also the preparation of the platform where we capitalize that expense, we started amortizing it in Q2. And then connected fitness. We did run a promotion in Q2 for our partners, our partner network. So that's why you could see the volume of bikes went up, but the revenue went down a bit. And that's all about driving inventory that translates to cash, right?
Exactly. So when they did the bike sales, it was an immediate cash grab, but it's a loss to the company because they sold them for like half of what they were selling them for. And that just tells you that people don't want them. From everything I have heard, they are not the greatest investment you could make. It's interesting, Sam. I would agree. If you exercise to build strength, I do think you get muscular thighs. I don't think most of the Beachbody programs are worried about strength focus, honestly. Shanti's new program will be. But I don't know if the current partners will be able to get out of the diet mentality enough to be able to successfully do his program, because they're going to have to eat, and they're going to have to eat quite a bit more, and eat differently than they have been. And I'm fascinated to see what that is going to look like for them.
Right? And then I think as eventually that inventory on the connected fitness side, frankly, stabilizes, that's when you'll see an improvement in the overall gross margin of the business.
Okay. Thanks again for taking all the questions.
Of course, John.
Our next question is from Darren Tuttle with Singular Research. Your line is now open.
Yeah, thanks. Thanks for having me on here. So just going back to the inventory purchase and service agreements for a second, because I've had some trouble kind of keeping tabs on this over the last couple of quarters. If I look at, the service agreement obligations that are scheduled out to 2028, and then I'm just focusing on the next 6 months out to 2023. Is there still a commitment on the inventory purchase agreements of around $22 million to close out the end of the year? Does that sound about right, or is that based on the pay down that you just recently mentioned? Is it going to be less than that $22 million for the next 6 months? Thank you.
Yeah, Darren, the majority of those commitments relate to normal course of business purchases for our nutrition business inventory, as that goes into our COGS. So I know I've been asked that question before. Are these commitments above and beyond normal course of business? No, for the most part, these are just normal purchases we do on the nutrition side. So it's nothing that's going to be overly taxing in any way. So we need them to keep driving our inventory and our nutrition business. And you can see our inventory balance continues to decline quarter over quarter as we manage supply and demand planning really well.
Okay, and so would the expectation be, or would the guidance be similar to these inventory drawdown levels being in line with maybe top line revenue, or should I think about it as something that's kind of separated between nutrition and the connected fitness thing?
I think it's good to think about it separately, because as it relates to our nutrition business, you got to keep retooling that inventory, and I think we're approaching a healthy level of inventory there. I think on the bike business, as you know, bikes, these are commercial grade bikes, they don't expire. We're selling through that inventory, so we're not planning any purchases anytime soon.
Did you guys hear that? So they're not planning on doing more bike purchases. So Sam, this is what I think when they're saying inventory drawdown, is that they are letting their bike inventory dwindle, right? So they had all of these bikes, and so they had those, and now they're not worrying about continuing that. They're just trying to get rid of this inventory. I don't think that the bikes, whether it was the bike sales or the bike classes, are nearly the draw that they thought they would be. They thought they were going to be competing with Peloton, and they just aren't. And so that is where they're seeing that the lower volume in their inventory, is because they're not replacing the bikes. They're just letting that part go. But the nutrition, they do have to have a continual supply of ingredients.
So that inventory level will continue to decrease in the coming quarters.
Okay, thank you. No more questions. Yeah.
Peloton, so from my understanding, Peloton's stock and different things has been going down as well, but I don't think to the same level that Body is. And from what I have seen, I don't belong to either Body or Peloton. But from what I've seen, Peloton is a lot more responsive to their customer base and actually listening to them. They are pushing out a lot more content than Body does. And so I mean, kind of like Hannah said, it's like the audacity to think that they can compete with Peloton. They're in completely different ball games, in my opinion.
There are no more questions, so I'll pass the call back over to Carl for closing remarks.
All right. Thanks again, everyone, for joining us for today's call. Obviously, we appreciate our stakeholders, our subscribers, our partners, and our corporate team. This turnaround, we're excited by it, and we hope to bring you news of some successes that occur over the course of the third quarter. Our determination to build the category of health esteem and to help more people achieve their goals and lead healthy, fulfilling lives is important to us as a company, as an organization. And I remain determined and committed to achieving our near-term goals, being good fiduciaries on behalf of our stakeholders, and our long-term goals on behalf of our stakeholders and the customers that we serve. And I appreciate everyone who supports us in this important work and look forward to updating you again in the next quarter. Thanks, everybody.
All right. So that is the call. Let me stop. All right. So let's look at a couple different things with this. Yeah, it's interesting. They haven't really been talking about Snickerdoodle Shakeology very much. And it really is it's the chai. It's the same one that they had advertised. They just rebranded the chai as that one. But they're not talking about it. They're not talking about any of these things. It doesn't make any sense as to why they're not promoting things. And yes, the Peloton Lululemon thing has been huge the last few days. Peloton is doing a lot of different things. Oh, hey, DC. They're doing a lot of different things that, again, Beachbody or Body is not even close to comprehending. So DC, I don't know if you heard this, but there's going to be some big announcements coming Thursday and Friday, that they've been meeting with the leadership of Body and talking to them. Apparently, there's also been a couple of different people that have been laid off at headquarters. I don't know who they are, but I've heard that there have been a few layoffs. And then they have this huge announcement that they're making. You'll either get the announcement either on Thursday or on Friday, depending on your rank, which again, I want to say to me is a missed opportunity, because you roll out an announcement to your higher rank employees, your higher rank contractors, right? So you roll it out to maybe your 5-star and above on Thursday, and then everyone else on Friday. Everyone else is going to know on Thursday. Just roll it out to everyone at the same time. But Beachbody is very much a class system. And if you are not an elite coach or you're not in the higher level, then you're not going to see any of these things. So it's super interesting to me that they're coming out with something right before leadership, versus launching something at leadership. So I don't know how that is going to play out with people that are going next week. So they're going to have to face these coaches next week, depending on whatever this announcement is. But there are definitely people thinking that it could be the going to more of a affiliate marketing type thing. So we'll have to see. We'll have to see what they end up doing. But did you just get an ad for a crypto scam? It's so interesting to me, the ads that they choose to play during some of these. They're hilarious. I may have to look and see what it is set to in my AdSense, but that's funny. All right, so I think tomorrow, I'm not even sure what my schedule is. I cannot keep track of things on a given day. But tomorrow I think I'm going to do the Beachbody Bros, and how upset they are right now. And they, in my opinion, have every right to be. They have every right to be upset. And it's interesting. So I do think some of the coaches are going to try and spin it. Other coaches are going to be like, this sucks and this is stupid. And they're going to continue to call Carl on his crap. I hope. That's my hope. I hope that people will do that. And call him on it. So I will say that this week is going to be interesting. So again, I'll try and do another live tomorrow, probably not on Thursday. And I probably won't do lives on Thursday or on Friday. And I'm getting a new floof. So we have two floofs. We have our cat. She is a Persian. And she is, how old is she? 4? I think she's 4, maybe almost 5. And then he's like, what? Okay, so we've got Smokey. Smokey, if you have ever seen on my stuff, she's a grumpy cat. She's a Persian. She always looks like she's mad. Then we have Grover. Grover is 2. Well, he'll be 2 in February. We've had him like a year and a half. And we have decided that we've been thinking about it for a while. Like, we need another dog to keep him busy. And the family that we got Grover from, the breeders, because we did purchase him, he's a Bernese mountain dog. They have a dog that they had tried to breed who is not breeding. They think she may be sterile or something, and they wanted to get rid of her. And so we are going to adopt her. So we are getting another Bernese mountain dog on Saturday. So we will have 2 Berneses. So we will have Grover and Barley. Her name is Barley. Like I said, she's 2.5. So yes, we're getting a dog for our dog. And I don't know how I don't know how I'm feeling about that. And I'm also going back to school. So, it's fine. It's fine. It's fine. Adding more floofs, going back to school, it's probably going to be fine. So if you see me like with even more gray hair than I currently have, it'll be rough. And it is a lot of floof, especially since they all shed an enormous amount. But it's fine. I'm not going to worry about my ones that are allergic to pet dander. We'll just give him some more Benadryl. Yes, so things are definitely going to get very busy. But I'm also very excited. So there you go. That is what is going on. Oh, yeah, it's interesting. So we, my mom actually had my cat's parents. And so we got my cat for my mom. My husband always wanted a Bernese. And then this one just kind of came up, and I'm like, we have a good home that we can help another dog. And that, since it's one that they were going to get rid of, then I felt good about that. I am actually, so for school, in my previous life, I was a human resources manager. So I have my senior professional in human resources and did HR for about 15 years before I started staying home. But over the last several years, I have gotten more interested in mental health. And so I am actually going back to get my master's in marriage and family therapy. But I want to specifically focus on OCD and scrupulosity in particular. And a lot of people aren't familiar with it. And so I'm excited to do some education around it because it is something that is very near and dear to my heart with some of the things that I've gone on, that I've had to go through the last few years and with my kids, and a lot of learning. So I'm excited. I'm excited to go back and learn this stuff. So I'm super excited, but also like, oh my gosh, I'm going back to school. Like, ugh, it's a lot. But honestly, my goal is actually to help parents recognize some of these warning signs within their kids, because for years we were kind of, we didn't mean to, but we were like reinforcing the scrupulosity and the OCD in one of our children, because we thought that, wow, they're just so conscientious and they're so good. And we were like, we were making it so much worse. And I think parents just need help. You just don't know. You don't know what you don't know until it's too late. And then you're like, "Oh my gosh, I've completely screwed up my children." And then you got to try and, undo the damage. So that's the goal. And thank you guys so much. Yeah, I'm excited. Um and I still have it on my list to talk about some of the Christian MLM stuff and faith transition type things. That's in there too. We're just going to do all the things. We got this. All right, you guys, I get to go do dishes before I pick up my kids. Scrupulosity, I'll just let you guys know really quick. Let me look up the official definition. But scrupulosity is a specific type of OCD that is where is let's see. You're very concerned to avoid doing wrong. Um, I'm trying to find like the best, that's not giving me what I want. Scrupulosity OCD. It's a subtype of OCD involving religious or moral obsessions. So you're overly concerned that something you thought or did might be a sin, or it might be, and it doesn't necessarily have to be within a specific religion. It can be just like moral doctrine. So past mistakes, errors, um, fear of committing, um, blasphemy, excessive focus of religious and moral perfection. So there are things around. So like some of the things that I have, because I have this as well. I definitely have things around like this is allowed, this isn't allowed. You can do this, you can't do this. Very like firm rules that honestly make no sense at all. Like, I don't think I'm going to go to hell if I drink alcohol, but I can't get past thinking that that's wrong. So it's going to be interesting. It's going to be really interesting. Um, uh, just to help people. And there are a lot of people. So Hannah's like, I've dealt with that. A lot of people have, and they don't understand that that's what it is. I never realized that I had OCD until I started helping a child with OCD. And we started going through some of the exposure therapies. And then I was like, oh, okay, yeah, I have this. And then, I started talking about it and I was like, holy cow, I didn't know that that was an issue. And it really becomes an issue when it impacts your life. And there have been times that it has impacted my life, and it definitely impacted my child's life. So anyway, so that's what I'm going to be doing. All right, you guys, I'm going to go do dishes before kids start getting home. And thank you so much for hanging out with me. And Karina just got on. Hey, Karina, I'm just ending. But I am, like I said, I am going to go live again tomorrow, and we're going to talk about Beachbody Bros. Because there were some amazing things, amazing posts that happened last week in the Beachbody Bro community. And I wish that Carl had looked at things before it was too late, because honestly, I did like the direction that Beachbody was many, many years ago. And Carl has just run it into the ground, and the MLM model was not the best idea. So hope you guys can join me tomorrow, and I promise I'll get it up. I'll get up a link before like 10 minutes before the stream. So, all right, you guys, thanks so much, and have a wonderful, wonderful rest of your day. Bye.